Hello traders, the title of the video is a little trading tricks for energy sector technical traders. Let's get started. I'm on the yearly chart of Oceaneering International Corporation. The EPIC is OII, Oscar, India. This is an American stock belonging to the energy sector, the oil and gas equipment and services. Oceaneering International Corporation, OII. All right. On a yearly chart, as you can see here, we can see that the price, there was a bullish trend in the shape of ABCD. All right. So if you do not know what is ABCD, a chart pattern, you need to go to www.stochastic-market.com to learn more about the ABCD chart pattern. So we have A, B, C, D. So the trending phase was in the shape of ABCD chart pattern. And after the trending phase, we have what we call a corrective phase in the shape of a sharp correction. So you see here, okay, 2017, 2016, 2015, from 2014 to now, this stock, Oceaneering International, was in a corrective phase. And that correction was what we call a sharp correction. So talking about a little trading tricks, here it is. There is a saying in the financial market that one should not catch a falling knife. All right, so this is what we call a falling knife. So when the price is going down very, very fast like this, in the shape of a sharp correction, one should not attempt to buy it. Because what usually takes place, you will see it on Twitter, on Facebook, all right, and you will see people talking about that the stock is now a cheap stock, all right, or a discounted stock does not mean buy, all right. A stock may become cheap, but the fundamental may be completely useless, and one should not buy it at all, even if it's 1 cent, all right, very important. So be aware of that, because you will see sometimes today we're talking about this stock is now very, very cheap, does not mean buy, okay. So one should not catch a falling knife. This is a sharp correction. What usually takes place, talking about a little trading tricks, is that very often, that's why you will see it like this. We have a trending first, all right. Remember this is a very simple trick, and then followed by a sharp correction. Now, when you see that, all right, you need to be very, very careful. All right, you need to apply Fibonacci retracement to the trending first, which are already done here, and you want to pay attention to the reaction of the price as the price is approaching a 50% and a 61.8% Fibonacci retracement levels. All right, so here, this is where we are now. You can see that the price is a little bit below the 50% and 61.8% level. See here, 50%, 61.8%. And it just dip a little bit below it, which is good. We want, if it dip below that zone, now you can start thinking, is it going to find a support below that level? All right. Okay. Usually, financial instruments with strong fundamentals that I prefer to call bullish cow, like Apple stock, Google stocks, all right. Usually we find a support near the 50% and 61.8% Fibonacci retracement zone. All right. So as you can see, we see here a falling knife. What usually takes place is that we wait for what we call the dead cat bounce. So the price at one point will bounce a bit. This is what we call the dead cat bounce. All right. Have you ever heard about that before? All right, so if you are experienced trader, you know it already. All right, so financial instrument rushing down, boom, 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 boom. Do not catch the falling knife. Now you will see what we call the dead cow bounce, which means people are waiting to buy it. So those who are ordinary investors say the stock is cheap. All right, It's now too cheap. It was $80 before, now it's $28. One must buy. It's too cheap. It's too cheap. But those traders are not highly sophisticated market participants. They don't perform Google Asset tests. They don't check, the growth rates. All right. They don't check the balance sheet. They are using technical analysis alone, and they are following the market noise. So they just buy. Fingers crossed, leg crossed, arm crossed, hoping that everything will work well. They will not also pay attention to the sector to which this financial instrument belongs to, and they don't want to know anything about the market cycle also. So they will buy. Sometimes those traders will be rewarded. Sometimes they will lose money, which is unfortunate, all right? So for us that want to trade like a pro, we want to understand what usually takes place. A trending first, followed by a sharp correction. Very often, this is about probability, not certainty. 70% of the time, you may notice that we may have what we call a dead cow bounce, where the price will go back up a bit because people are desperate to buy it. And as people are shouting, it's too cheap, you may see a bit of bounce like this. But for stocks that are not financially viable, I'm not saying that this stock is the case, may bounce up a bit, forming what we call a dead cow bounce, following by another move down. Sometime the price may come back down to the almost to the beginning of the prior trend, all right, or may stop at 88.6% Fibonacci retracement level, or the zone between the 78% and the 88% Fibonacci retracement zone. That's another zone you want to watch. That's the oversold zone, the zone between the 78% and 88.6% Fibonacci retracement level. That's another oversold zone. All right. So you want to, now that we see this stock like this, you see it coming down very sharp. It peels through the 50% and the 61.8% Fibonacci retracement level. This is a buy-in zone. Now, the good news is that it did below it a little bit. So, because of what is usually talking about probability, 70% of the time, there is a high chance that this stock, Oceanian International, may recover a bit. If the fundamentals are solid, it may go back up more. But talking about the dead cow bounce, all right, I'm showing you something that you need to understand and you need to be aware of because it's happening all the time. So you may also be prepared for it. By the way, this video is for educational purposes only. It's neither solicitation or an offer to buy or sell Oceanian International Incorporation. What you need to do, all right, is this. So, whilst one is expecting the dead cow bounce, you want to apply Fibonacci retracement to the falling knife. This is what I'm calling the falling knife. So from here down to, I will use the closing price, okay? To here. So you can see I'm using the closing price. I didn't push it all the way to the low. You can do all the way to the low. But for this stock, I'll prefer to use the closing price. So you apply Fibonacci retracement one more time to the falling knife. And if you see it here, it starts changing direction, which I'm going to explain to you in a minute. All right, start changing direction. And you say, all right, it's going to form the dead cow bounce. You want to apply Fibonacci retracement to the falling knife, the sharp correction here. And you want to highlight the 50% Fibonacci retracement level of the falling knife. Here it is $53.55. Most financial instruments that are forming this kind of pattern, trending first, sharp correction, waiting for the dead cow bounce. If the dead cow bounce continues, very often the stock that are forming the dead cow bounce will stop at the 50% Fibonacci retracement of the sharp correction. So for this stock, if it start going down from here, professional, as they are pushing it up, they are watching the level of $53.55, which is the 50% Fibonacci retracement level of the sharp correction. Now, does it mean that the stock cannot continue to go up? Something like this. Does it mean that it cannot go up all the way up to the beginning, forming a double top, or even exceed that? It doesn't mean that, okay? It can continue to go up. But what we are looking for, because there are some reaction in the market, something that is happening all the time. We are working with probability. Traders are not gamblers, they are strategists. So everybody is watching a 50% level. So if the price manages to get to that zone, there will be some sellers in this zone. So you want to know where are the sellers, where are the buyers. I know there are buyers in this zone. I know there will be sellers in this zone if the price start going up and it reaches that zone. All right. So if it reaches this level, those who are buying the dead cow bounce will, technical, sophisticated traders will come out here. They will start securing their gain or even day trading this session because they know that, okay, I don't want to swing trade this one or I don't want to position trade this one. All right. You may swing trade it and then you may say, okay, grabbing my pips, securing my gain gently. We don't know what's going to happen. But at this point in time, even for a day trader, this is an occasion to look for an opportunity to sell if the price comes to the 50% Fibonacci retracement level of the sharp correction. All right. So for this stock right now, as things stand, we will expect a bounce up a bit, provided, I'm using my word carefully, provided that it finds support here. Why am I talking to you like this? The reason why I'm talking to you that provided that we have a support here is because if you look at 2016, this candlestick bar here got a tail. If you have been watching my video, you know that I'm talking about this all the time. The tail, okay, of a bearish candlestick bar is a support zone, all right? So the shadow above a bullish candlestick bar is a resistance zone. Same thing for the shadow for the bearish candlestick bar. Those are sellers zone, like here. You see, they sold it here, which here, 2013, they sold in this zone. Look, as the stock came to this zone in 2014, they sold it again. All right? Look at this one here. So you may play with the candlestick bar, tail, and shadow. Here it is. This one you see here, which year was that? Let me show you again if you are a new trader. This one got a tail, yes or no, 2010, you see. We are on the yearly chart, we are not on the 5 minute time, we are on the 30-minute time frame. This is not a market noise. So there was support here. That's why this candlestick bar got a tail. So there were all days to buy. So there are footprints in the market. So if you want to know what the hedge funds and the financial market are doing, you can just look at the candlestick bar and see the reaction, see the shadow, the tail, and figure out what they are doing. So those market participants, all right, always buy at a specific price. So there are valid reasons. I don't know what's happening to my chart. I try to put a spot here, and it's not drawing a spot that I want to draw. Okay, I'll leave it. So there are valid reasons why they buy at a specific price and why they sell at a specific price. So you have to understand they have a lot of resources in their disposal to figure out that this is the best place to buy, that's the best price to buy, that's the best price to sell. So though you do not have all those resources, you can take advantage of the information on your chart. They sold it here, they have a reason why they sold it here. They bought it here, they have a reason why they bought it here. So the same thing happened here in 2016. This stock was bearish last year, went down all the way here in the zone of $22.43. But after that, it found support. Yes or no? It's there on the chart, and the chart will not fool you. Now, because we are below the 50%, 61.8% Fibonacci retracement zone, which we call the sweet spot zone. By the way, for traders who want to know more about the Fibonacci trading, please subscribe to the Pro Traders YouTube channel and watch the playlist about Fibonacci retracement, Fibonacci extension, and so on. All right? Okay? So, looking at this chart, because it got a tail here, there are support, which means there were buyers in the zone. It looks to me that this stock, at this point in time, we need to monitor it. So we will put it on our bullish watch list. Doesn't mean that we're going to buy it by all means, but we just put it on our bullish watch list, which means we will put it under technical analysis surveillance, so to speak. All right? So we will be monitoring this stock. So talking about a little, okay, trading tricks for energy sector trader. The sector was bearish. The oil, crude oil was going down. A lot of people are expecting crude oil to bounce up a bit. Here we have a stock also that was going down for some time, like the crude oil itself. Will it bounce up a bit? We will see. But we know there is a support here, and also there were buyers here. So this stock, we know the story also, is that when we have a falling knife, one should not attempt to catch the falling knife. One should wait for the price to pierce through the 50%, 61.8% Fibonacci retracement level of the prior trend. And then we monitor the reaction of the price, waiting for the dead cat bounce, bringing the price to a 50% Fibonacci retracement level of the sharp correction itself. Doesn't mean that it will definitely find resistance here. Price can continue to go up, but those are the things that usually take place. And if it's taking place, we have an edge, okay? As the stock find a resistance at 50% of the sharp correction, once you understand that the price can also, so do not assume anything, can also find a support here. Can pull back gently and then find a support here. But generally, what usually takes place, the price will form a zigzag pattern. Here it is, it forms a zigzag pattern. So sharp correction, dead cat bounce. This is the little trading tricks that you want to share with you today. Because if you don't know about earlier way, you can understand what I'm talking about now, okay? Price sharp correction, dead cat bounce, and a move down, forming what we call the zigzag. See the zigzag. Most stock will exhibit that pattern after, okay, the sharp correction. What is taking place, the dead cat bounce, I will explain in another video, is those who sold the stock. This is what we call the harvest time. So people say, why are you selling Oceaneering International Corporation? All right? It passed the Google Assist test. The fundamentals are solid. The company is making money. Why are you selling it? Because probably the sector itself is overbought, or the market is overbought, or the market sentiment has changed, or just those who stay in this trade since 1990, creaming this stock, buying it, decided that it's time to take some profit, or they think that the stock is now a little bit expensive, and they are just waiting to buy it again at a reasonable price. Nothing wrong with it. They will buy it again. Those who sold it will buy it again. Doesn't mean that they are selling to make it cheaper, okay? They are just selling for harvest time. So remember the zigzag pattern, remember the sharp correction usually is followed by a dead cat bounce and the third move down, bringing the price into the zone of 78% and the 88.6% Fibonacci retracement level. So looking at this stock at this point in time, so you know the little trading trick. So you will look at chart, because what is happening sometimes, trader will, I see it sometime on Twitter, on Facebook, people will be shouting when the market in fact is overbought, this stock is cheap, this is cheap, it's cheap. Cheap does not mean buy, okay? If you want to buy and hold, you want to wait when a market or the sector is turning from bearish to bullish. Like crude oil has been bearish for some time. It's looking a little bit bullish now, but maybe there will be more downside. But all right, those are the time when people buy and hold. Bear turning, a sector turning from bearish to bullish. Then you look for stock that belong to that sector, or a market that is turning from bearish to bullish. S&P 500 was turning from 2009, turning from bearish to bullish in 2009. That's where we see this bullish trend now. That's the time to go around now, look for individual stock to buy and hold, or if you are bullish swing trader, bullish position trader, that's the time. Otherwise, if a stock is just cheap, all right, and you buy it at the wrong season, ask the farmers. They do not sow any time. All right, so the farm is there, everything is there, the equipment is there, but they don't just go around sowing things any season. They have a period when they sow, and they have a season when they harvest. As a trader, you want to do exactly the same thing. So you may say to me, George, oh, I love you so much. All right, tell me more. Okay, all right. Okay, so now, for us as a technical trader, after identifying that the smart money did buy a little bit here, all right, we now must use what we call multiple time frame trading method. Now, traders that have been following me before say, George, please do me a favor, don't say it again. Allow me to speak to new traders, okay? All right. So now we are on a yearly chart. So are you a position trader? Are you an investor? You want to use the yearly chart? Are you a swing trader? You can use the yearly chart. So now from the yearly chart, There's a support zone. We go to which chart? Correct. Monthly chart. That's correct. You know it now. You know it now. We go to the monthly chart and we want to pay attention to what? The market pattern. Which channel do we have here? Okay. Children will tell you it's a declining channel. It's going down. Okay. So you can tell your child when you see like this, priority to sell signal. But now we are at a support level as we see on the yearly chart. Now we are on the monthly chart applying what we call a top-down trading method. Different time frame trading method. Yearly chart, monthly chart, daily chart. So now here we are. So we are still in that declining channel. The channel is telling us the sentiment relating to that stock. So you may say the yearly chart, we are at a support level. All right. But on the monthly chart, we are still in a declining channel. So what is our expectation? All right. So our expectation will be for Oceanian International. If my pronunciation is correct, I love that. Let me know in the comment section. All right. Oceanian International Corporation to come out of that declining channel. That will indicate to us that the bearish momentum is diminishing. And not only that, to form the first higher low or to retest that channel. Myself, I usually prefer the first higher low. All right. You see now? You see here? You see the first higher low. Okay. Now I want to show you something so you do not forget that. Okay. I want to show you something now. So you see here. Let me show you clearly. Okay. I was telling you that we pay attention to what the smart man is doing. You see the shadow here. We know that they were selling, okay? So in 2014, the price came to the same zone. So people will be thinking, well, if you know this, you know that smart man is sold here. Don't step on their feet. All right? So you'll be saying, okay, we are now in a resistance zone, selling zone, okay? It may pierce through it, it may pierce through it, but we are aware of it, that this is a selling zone. Gently, okay? So now we see that this. So suppose you were here, how would you trade this? As I'm explaining to you now, wait for the first lower high. Here we are at the support level because we are using yearly chart, monthly chart. So on the monthly chart, we wait for the first higher low or a double bottom chart pattern. Or price returning back above, okay, a psychological price level. Now, leave that one alone. I don't want to confuse you, okay? First higher low. So, suppose you were here. I'm going to go back again. So, suppose you were here, you're on the monthly. You will say, I will be telling you, look for, I will prefer the first lower high, yes or no? Because it's a resistance zone. Look, go to the monthly chart, and you will see now. You see here? In that zone, look, that's the first lower high. Retesting, break below that support level. You see here, the price bounce here, support here. He breaks below it and retests here. That's the best place to sell instead of here. This is the first lower high. So therefore, what's going through your mind now? What would you prefer here? You will also prefer the first. Okay, so there is a resistance here. Yes or no? That would be a beautiful, gorgeous setup. Provided that one has also checked the financial. So I need to mention that because sometimes traders are just thinking of technical alone. Something like break above that resistance. Every test is forming the first high low, or we want to see a bullish chart pattern. Maybe an inverted head and shoulder chart pattern. So or a double bottom chart pattern that is outside this declining channel. So I mentioned this to one trader one time. Sometimes trader will trade the inverted head and shoulder chart pattern, but that inverted head and shoulder chart pattern is still in a declining channel, and they get cooked. Now, in the proper sense of the word cooked, because they are trading a bullish chart pattern that is still in a declining channel. Then if you are trading it, you need to handle it carefully. So you see, sometimes you may see an inverted head and shoulder chart pattern, but it's in a declining channel. Be gentle with that one. What we will prefer, like you see here, so if you call this, if you assume that probably, Joe, we're going to have an inverted head and shoulder chart pattern. You say probably this will be the head, this will be the left hand side shoulder, and now we are now waiting for another, okay, shoulder to be somewhere in this zone. So instead of breaking above this resistance, which myself I would prefer, this is about myself, all right, not you, all right. So, or form an inverted head and shoulder chart pattern, or a double bottom chart pattern outside this declining channel or breakable retest. So after, if we have that double bottom, that first higher low, then we have a signal. All right, are you a position trader? Okay, do you want us to analyze chart for you? So you pay us a lot of money, not this to make you laugh a bit. If you want to do that, that's up to you. So now, from if the signal is fired, so to speak, all right, on the monthly chart, okay, we go now to the daily chart to enter the trade. So you may say, oh, George, please, I don't want to enter on the daily chart. Then you will use the daily chart as your trading setup and break it down again. So you will use daily chart, hourly time frame, 10-minute time frame. I don't want this video to be too long. I think I've said enough. But before I close this video, I want to mention one key level to traders for this Oceanian International Incorporation. What is beautiful about this stock right now, so as I'm looking at the chart alone, all right, because we need to check Google ASI, perform Google ASI test, check the financial and so on. Looking at the chart alone, the price is now sitting, so to speak, at the first long-term equilibrium price level. In 2017, that level is 2745. That's the peak line on my chart. So I will not repeat it again because traders say I repeat myself too much. That's here. Okay? 2745, one more time. That's it. Okay? So that level, if you are trading this stock, you don't want to forget it at all in 2017. All right? The short-term equilibrium price level is quite close to the long-term equilibrium price level right now, so I don't want to mention it at all. Therefore, 2745, that's a very important key level for both technical traders and investors. So for now, this stock is, technically speaking, is looking good. The next step is what? Go to www.googlefinance.com, click on financials, all right? Click on balance sheet, click on annual data, compare the current liability to the current asset, see the trend, and so on. Check the video about Google ASI test by George Trio, and you perform Google ASI test. Check the cash flow, all right, and so on. Check the news, the economy news relating to this stock. What's going on? All right, what's going on? All right. And then, as you are trading this stock itself, you want to apply what we call the trading triangle. Are you a subscriber? Okay, all right. So subscribe today. The market first, the sector, before the individual financial instrument, the heart of the trading triangle, market leaders, economy news, and fundamentals. So this is the end of this tutorial about a little trading tricks for energy sector technical traders. As an energy sector technical trader, you are trading first the energy sector. That's why you are trading first. So if you are trading any stock that belongs to the energy sector, you are indirectly trading crude oil. So you want to know what's going on with crude oil. Where are we? What's going on? All right. For this little trading tricks, after a bullish trend, some stock will exhibit a sharp correction. Do not catch a falling knife. Allow you to break through the 50%, 61.8% Fibonacci zone, and then implement a top-down trading method without ignoring the economy news and the fundamentals. I hope you have learned something for this video also, and will improve your energy sector stock trading. If you have any question or suggestion, well, this is your time to put in the comment section so we may know exactly what you think, all right? If you like this video, give us the thumbs up. If you dislike it, don't worry. Give us the thumbs down so we may know that this was another useless video, so we may look for something else to put on YouTube. All right? Happy trading to you all, and speak to you soon. We are the TSTW, a 24 traders, talking about a little trading tricks for energy sector technical traders.